Hi, everybody. I'm Susan Grandam. I'm a co-founder and director of Climate Network Lanark, which is hosting this not webinar. What did we decide to call it, Tim?
I'm not sure. I believe it's a
Anyway,
Zoom call.
this Zoom call today with Tim Nash. This is the first of Climate Network Lanark's new speaker series, and we're thrilled that we have something like 60 people signed up for it, which is just a great start. A couple of housekeeping things. Time is tight. Technically, we have 1 hour with Tim, but if he decides to give us a bit more time, then it's just bonus time, which is fabulous. You are muted. We're not going to have verbal questions or conversation through Tim's presentation. Please do type all of your questions in the chat box, and Tim will monitor those for his presentation purposes, and I will monitor for anything having to do with CNL. Emmeline Narrowway is managing our electronics today. And we are recording this session. So if you don't want to be recorded, then make sure that your camera stays off. We want to be able to make the recording available on our website later. So, how did we get to this point? A friend happened to hear Tim interviewed on CBC back in the late fall. Let me know. I emailed him, didn't have a clue who he was, wasn't expecting anything, but he called me quickly within a couple of days and very, very quickly offered to do this Zoom call for free for CNL to support our local climate efforts. So thank you, Tim, for your very generous contribution to us. I would ask in turn that those who are attending today make a donation to CNL. You can simply go to our website and you'll find a donor button at the top right. This is the first in our new speaker series. Keep your eyes and ears open for coming speakers and workshops on things as diverse as climate anxiety, induction stoves, Hydro One's battery backup and solar program, and a series on planetary boundaries. It's just the start. Yes, we're covering the waterfront. Yes, we'd welcome ideas from you. And yes, some will be virtual like this one, and some will be in person. So let's get going. Tim Nash is the founder of Good Investing and blogs, the main one being The Sustainable Economist. As an expert on socially responsible investing, impact investing, and the green economy, he is regularly featured in publications such as CBC's The National, BNN Bloomberg's Market Call, and the Globe and Mail. He earned his BA in economics from Dalhousie University on the East Coast and his master's in strategic leadership towards sustainability from the Blekinge Institute of Technology. I got halfway there, Tim. He is the lead researcher for Ethical Markets Green Transition Scoreboard research report, which details more than 10.3 trillion of private investments in the global green economy. Welcome, Tim, and thank you very much for doing this.
Susan, it's my pleasure. Thanks so much for having me here. Um, yeah, it's for folks who are curious. It would have been the on CBC the What on Earth podcast. So I don't know if folks are aware of What on Earth, but we can dig up that link for if you're curious. But yeah, it was really really cool to be featured there, and and I think that bio needs to be updated because that Green Transition Scoreboard number actually redid the research this year, and we're now over $20 trillion
Oh,
since 2015. Like literally, it's doubled since that last figure a few years ago. So I've been doing work around the green economy for quite a while, and my business is called Good Investing. The way I make money is I help people figure out how to invest according to their values. And I want to be upfront. I'm not a broker or a money manager. Or an advisor. I never touch my clients' money. Instead, I'm like a coach or a consultant. More and more, I see myself as a teacher. And I teach people about investing basics and about sustainable investing. And I'm all about empowering folks to be able to use their money to be able to, take control and do some good in the world. So really so honored to be here today. I'd love to, get people comfortable using the chat feature. If you can let me know where you're coming from. If you're coming from Lanark or from Ottawa or from Toronto, or, if you want to let us know where you're coming from, would absolutely love to know where people are at. I am coming from Toronto. It's Treaty 13 territory, home of the dish with one spoon, wampum, if anyone's kind of curious about the history of this land. But what I'm going to do is jump into my presentation. And that if folks have questions along the way, just don't be afraid. Throw them in the chat. I certainly will have time for Q&A at the end. But then as well, if you do have questions along the way, really, really happy to be able to answer them as we go. Perfect. Ambram, Almonte, Perth, amazing. Happy to see where folks are from. Carleton Place, awesome. All right, so what I'm going to talk about today is climate proofing your personal finances. So really, it's like when it comes to this notion of aligning your investments with your values, there are a couple reasons to be able to do it. I think first and foremost is the ethical side of things. A lot of people want to do things, sort of align their investments with their heart, that sort of heart-centered approach. And we'll certainly be looking at this from an ethical lens first and foremost, but there's also the financial aspect that I am a CFP, a certified financial planner. So you'll hear me sometimes kind of wear my CFP hat and talking about things from a risk perspective or a financial first perspective. I'm very happy to go there. And then sometimes I'll be wearing sort of more my activist hat, saying, okay, if we really want to impact change in the world, what are the tactics we can do there? The good news is that you can actually do both at the same time, that this is something where it really, when I help folks, it's good for the planet, but then it's also good for your personal finances. So for me, I'm trying to find those sort of win-wins that we're not sacrificing anything here. Really, for me, my hope is that by being a little bit more intentional, we're going to have a win on the activist side and we're going to have a win on the personal finance side. So welcome. I'm so honored to be here. So honored that you would take some time to spend this time with me today. And again, do want to encourage people to ask questions as we go. So my name is Tim Nash. I'm on a mission to help 1 million Canadians invest intentionally. That my sort of overarching change theory as it relates to this, as it relates to my business, is that we need a sustainable economy. But as it relates to building a sustainable economy, a lot of people, most activists, when it comes to money, have no interest and don't think about money and don't want to, look at sort of necessarily where their investments are. And, certainly when it comes to the economy, I think in large part, I'm going to say it, I think we've kind of lost people's hearts and minds, big picture. That when I look at the political landscape that we're in today, the fact that we couldn't even have the most conservative of climate policies, a carbon tax and dividend, which is like the most conservative market-based solution for climate, we couldn't even have that. Right. But it tells me that there's a bit of a problem here at the macro level. Certainly, I'm happy to talk about that. But I think that before we fix things at the macro level and talk about systems change, we need to kind of look at our own backyard first. And so my job is to help you figure out how to manage your own money and your own personal finances in a way that's contributing to a sustainable economy, such that then, now that you're comfortable with it and you've got the language and you can see that there aren't trade-offs, we can then be more effective at pushing our politicians and that systems level change. But to me, it kind of happens at the individual level first. So that's why, my dream is that 1 million of us who care about climate invest intentionally, see that we can earn very good financial returns, that it's the right thing to do, but that it's also the smart thing to do. And that now we're going to be in a position to leverage that change at a bigger systems level. So that's kind of, where I'm coming from. Really happy to be here today. So before we get into the nitty gritty, I want to help people remind you why we care about investing and why we care about money. Because I find that for a lot of folks, when we start thinking about money and we start thinking about investing in order to make more money, we get kind of trapped into this worldview and into this psychology, somehow like the greed is good and that we're participating in the worst, slimiest parts of capitalism. And I'm like, no. What we're trying to do here is to create self-sufficiency, financial self-sufficiency. And some people use these words of financial independence. Some people talk about financial freedom. I don't know if anyone remembers the old Freedom 55 commercials, right? But this idea that you're going to slog, you're going to work, you're going to have this terrible job, and you're going to be miserable for decades and decades, and then you're going to hit 55, and then now you're finally free, and now you get to do all the things you want. And like for me, financial independence, financial freedom, okay, sure, that ain't it for me. What I like talking about is financial fulfillment. And this is this vision. The analogy that I use is that investing is like growing a garden. That we're planting seeds, right? We're growing, we're harvesting fruits and vegetables, our dividends and interest payments. And that my dream for you is to end up with this beautiful garden that almost looks like a forest of food, such that you can walk through this garden and you know that you will never go hungry. You will never go without, that you have more than enough, this feeling of abundance, of economic security that allows you not only to look after yourself, but allows you to be generous with your friends and your family and your neighbors, that allows you to be generous with your time such that you can volunteer and you can be a good activist, not worrying about where your next meal is going to come from or paying your bills at the end of the month, that you've got this financial fulfillment. You've got more than enough. So this is the analogy. This is the big why we're doing this, why we're investing in the first place, is to have this sense of fulfillment, of more than enough, that all of our needs are met. Hopefully, most of our wants are met as well. And that we can be generous with our time and our money and our energy, right? Because we have this sense of abundance. That's where we want to get to. Now, we're not all there yet, right? A lot of us are still, economic insecurity and a little bit worried about things. But this is the dream. This is the vision of where we want to end up. And that to have this not only a garden that is bountiful, but that's also sustainable, that's also healthy for us and for the planet, where we're not hurting other people, but we're ideally creating a more sustainable economy along the way. And so the first step that people can take in order to do this is to join a credit union. We're so lucky here in Canada to have this amazing credit union system. I remember, a little while ago, there was this whole sort of boycott Loblaws thing. I don't know if people were, caught on to this at all, but there was this big, Loblaw. And people are are starting to realize that in Canada, we don't have a lot of competition. We've got these big oligopolies with the grocery stores that, Loblaws and Sobeys, and where they just, control everything. Now, we're lucky in that we actually, if you are lucky, that some places have some food co-ops, but it's really hard to not buy things from Loblaws or Sobeys. But when it comes to the banking system, we still have this big, bad banking system. But we're so lucky that we actually have this alternative, this parallel system of credit unions that is strong and robust and can do everything that a bank can do. We're really curious to know if there's anyone who's part of a credit union in the audience. If you are a member of a credit union, I'd love it. Throw it in the chat. Let me know what credit union you're a part of. I would love to know what credit union you're a member of, if you are part of one. Now, I've done a lot of work. I've got like a YouTube video and stuff about sort of banks versus credit unions. I want you to know that from a financial perspective, if I'm wearing my certified financial planner hat, they're the same. Okay? They are absolutely the same. Offer a lot of the same protections. Your deposits are going to be insured with banks. It's federally. With credit unions, it's provincially. So there are these tiny little differences. But by and large, when it comes to checking and savings, really these are nearly identical. In fact, credit unions often have much better customer service, right? I see a few people here, right? Case Desjardins, Hubert Financial Access Credit Union, YCU, which is, I think it's like your credit union, your community credit union, something like that. Meridian, right after I spoke in Ottawa back in 2019, amazing. Kawartha Credit Union. One in Smith Falls is the one that operates online. So, so it might be an interesting question, Susan. Here, why don't I, if y'all are cool with me just doing little tangents every now and again, let me show you one of my favorite little hacks here, which is the Exchange Network. Here we go. So, I've already been searching for this, so I've got it here. And then I can close this. So what I'm going to do here is we're going to say, if I do Lanark, will that count as the city? Susan, I don't know if you're comfortable sharing with me your postal code or like something close to
Sure.
it.
Yep.
What is
K
it?
K7H3C7.
Okay, let's see what pops up here. So, one thing that I get often is that when it comes to banks, that they will, people are really worried about like ATMs and stuff like that. So let me see, is this going to work? Here we go. So what's cool about credit unions is that they're part of this exchange network. So let's see here. So this is Perth. Is that you there?
Can be, yep.
Smith Falls. Okay. So what I can see here is, okay, so it looks like we have a free ATM that you can use as part of Manulife Bank in Perth.
Oh,
Now, there should be more of them. I don't know why. Let me see. Does it give me... it's kind of funny here. But it looks like in that Circle K. Usually I get a few more. Certainly I know if we look at Ottawa, we would get a whole bunch of different hits. I don't know why, if it's just doing the... Let me see. There's another one. Ding-free ATMs. Here we go. This is another little thing where basically all of the credit unions are partners and will allow you to use ATMs for free. So, okay, it looks like this is an actual app. Ugh, okay. So it's not gonna, it needs me to download the app here. So I apologize. But what I can say is that for you, Susan, in Perth, that you can join any credit union and you can access this ATM located in the Circle K for free, which is awesome.
yeah.
So now sometimes people will want to have be able to go into a branch. And so we can kind of search for, but in my experience, we really don't use the branches very often at all. That I've been in, I think literally one time in the last 7 years. So to me, we can absolutely join any credit union in the province. They are provincially regulated, and that you can use every credit union ATM, as well as those Manulife ones, as well as National Bank ATMs for free. So I really like using that website of the Exchange Network ATMs to be able to figure out what ATMs you can use for free, and then just do everything else you do online. The reason we do it, well, is because the Canadian banks suck. I think we all know this. I think if you haven't seen, if you want to know the actual nitty-gritty data, this is a report, Banking on Climate Chaos, where they look at globally the biggest financiers of fossil fuels around the world. Royal Bank shows up number 8 in the world, TD close behind, Scotia, CIBC, and BMO. So our big 5 are all in the top 16 banks globally. You can see how much they funded in 2024, right? And then this is the total from, 2021 to 2024, such that, literally we're talking about hundreds of billions of dollars of fossil fuel financing. And the connection is that when we deposit money at a bank, we use something called fractional reserve banking. This is just like the system that we have, okay? And so the way it works is that every $1 of deposits allows for about $20 into loans. So this is a multiplier effect. So when I keep let's call it $1,000 in my RBC bank account, well, that lets RBC loan out $20,000 in loans. And guess where a big chunk of those loans are going? Fossil fuels.
Yep.
So this is why this is step number 1. I'm going to talk about investing in a minute, but step number 1 is about your deposits, that your deposits matter. And this often is the first step and kind of like the easiest step that you can take. Because with credit unions, they still use the same fractional reserve banking system. But when it comes to credit unions, who are they loaning money to? They're loaning money to small businesses and mortgages in my community. So it's still creating $20 worth of loans, every dollar of deposit, but it's not going to large corporations. It's not going to fossil fuels. It's going to my neighbors. So your deposits really do matter. And this is from Project Drawdown. I don't know if folks know Project Drawdown. Wonderful initiative. So they looked at different things that they can do. And they have this awesome initiative where they really are encouraging people to move their deposits. And what they found is that, basically this is 8K from a carbon intensive to a climate responsible bank is about, double the impact of adopting a vegetarian diet. And I think is about it's like 2, 1.5. So, I forget exactly what the X is, 2.5 times, avoiding one cross country round trip flight. Now, I'm not saying it's a replacement for these things. I still want you flying less. I still want you eating less meat. I still want you to switch to an electric vehicle and switching to a residential solar. But if you're not looking at where your deposits are, you're missing a huge chunk of your sort of personal carbon footprint. And again, this is one of the easiest things to switch. Credit unions, we can also often get zero fee checking accounts. A lot of credit unions offer them. Susan, definitely they all operate online, right? So I'm a member, Alterna. Another one is Duca, DUCA. Libro is another really popular one in Ontario. A Meridian Credit Union is a pretty big one. And then, you can see here like Kawartha Credit Union, there are a whole bunch of people in the chat. Comtech in Kingston. And again, you can do this online with any of them. And, you really don't need the branch very often, such that to me, this is like one of the easiest things. Like, how hard is it to eat less meat? How hard is it to avoid flying if you want to go visit family or get invited to a wedding? Like, sometimes we can't avoid those things. Switching to a credit union is so easy. So easy. So it really is pretty straightforward, in terms of this. If people want to learn more, I do have a mini course, so I'm going to talk about my services sort of at the end of it, but I do have a classroom where I've got a mini course on how to fire your bank and join a credit union, kind of break it down step by step. It's really not that hard. It's not rocket science. And to me is certainly one of the biggest, easiest things to climate proof your personal finances. Action number 2 is to learn investment basics. That again, I think a lot of us environmentalists kind of, have our head in the sand as it relates to money and especially around investing. I got a lot of people have a lot of barriers. They have guilt and they have shame and they have all these negative emotions. For whatever reason, people think you need to be good at math, right, to understand investing. No, you do not need to be good at math. No, this is more about learning a language or a philosophy. There are a bunch of terrible acronyms, right? So this alphabet soup of acronyms that you need to learn, but it is really more about learning a language than anything else. So I'm just going to go through some very, very simple investment basics that when it comes to investing, we're going to basically build a pie chart here. You can see this is a very traditional balanced portfolio, which is a mix of both stocks and bonds. Okay. Stocks are like the rabbit in the race. Go up and down and up and down. It's where we get those higher expected annual returns, but there's a lot of volatility. Bonds are debt. We are loaning money to governments and corporations. This is the safe, stable part of your portfolio. I often use the analogy that building a portfolio is like baking a pie. The bonds are like the crust of the pie, right? Safe, stable. But the reason we invest is we want the stocks. The reason we eat pie is we want the filling, right? That's why we want those stocks. And so one of the biggest decisions you'll make is what percentage of stocks versus bonds. This is akin to how much risk you ought to take. If you're younger in life and have a longer time horizon, you can be a little more aggressive. So you'll have more stocks, fewer bonds, sort of a thinner crust. But as you get older in life, you want to take less risk. We're going to have a thicker crust. Right? When the worst things you can do, nobody wants a soggy bottom for their pie. So we want to make sure that we do have the appropriate amount of bonds in our portfolio. This is sort of investment basics. The issue is ethically, If you haven't invested in a sustainable fund, if you haven't gone out of your way, then there is going to be some terribly evil things inside of your investment portfolio, because most funds do operate under this principle of diversification. And this is a core value for investing. We want diversification, right? The way we build a resilient ecosystem is through diversification. The way we build a resilient investment portfolio is through diversification. But because these things are hyper diversified, it means you get some nasty things inside of these portfolios, including, obviously fossil fuels, especially here in Canada, pipelines, coal, not only coal mining, but also utilities that burn coal, things like weapons, whether it's firearms or whether it's controversial weapons like cluster bombs and these like terrible things that exist in the world. Right now, a big thing is for-profit prisons. If you're following what's happening in the U.S. with ICE, and if it's just, making your heart just ache as much as it is mine, you just want nothing to do with that, with ICE. Well, when people get detained, right now they're being sent to for-profit prisons. There are two publicly traded companies, Geo Group and Core Civic, are publicly traded companies that operate for-profit prisons full of ICE detainees. And if you haven't done the homework to think about what's inside your portfolio and made a decision to invest ethically, there's a really decent chance that those companies are inside of your portfolio. So this is the problem, is that by default, the global stock market is terrible. And everyone's going to have a different definition of evil and where to draw the line. And, I've had some people say since the war in Russia started, I'm actually okay with some military companies, So everyone's going to have a different line in the sand. Everyone's going to have different, idea of sort of doing less evil. But if you've done nothing, if you're just invested in, traditional funds, well, guess what? All that stuff is probably in there. So instead, what I help people do is build a sustainable portfolio. Now, the bulk of the pie is going to be doing less evil stocks and bonds. Okay, so we're still baking a pie. It's still the same. Returns are the same. Risk profile is the same, right? But what we're doing is doing less evil with these guys. So the goal is to earn the same market rate of return. Just let's get rid of the evil stuff. And everyone has a different definition of what that could mean. And then, if we want to go the extra mile, we can carve out part of the portfolio for green stocks. This is investing in, we call them green themes, like renewable energy, clean technology, water infrastructure. There are funds linked to the UN Sustainable Development Goals, right? So there are a bunch of different definitions of like doing more good. And then my favorite thing are impact bonds or impact investments. This is, really where we're going out of our way to invest in things like community bonds or renewable energy cooperatives. And if we've got time, if people want to learn, maybe I can do a bit of a deep dive on this side and just kind of show people some of the options. This is the piece of the pie that I get the most passionate and excited about, is carving out part of your money for these, like, we're investing with nonprofits and co-ops. And this is like that regenerative piece of it that I love so much. Now, the analogy that I use is that, or I guess before I do the analogy, I'll just do a little bit of language. So when it comes to sustainable investing, again, the way I think of it is I kind of break it up into doing less evil and doing more good. When it comes to doing less evil, there are three main strategies we can use. Number one is ESG, which stands for environmental social governance. This is data. This is information. This is us now starting to ask questions and measure companies, not only their financial performance, but now also their sustainability performance. What are their carbon emissions? How much water do they use? Are they creating other forms of pollution? Right? On the social side, how well are they treating their employees? What's the retention rate? What's the gap between the CEO versus the median salary? Right? On the governance side, super important, is the CEO also chair of the board? Right? How much control do they have? Right? This notion of voting chairs versus non-voting chairs. How democratic are they in terms of their governance operations? Do they have diversity on the board of directors? Or is it all, rich old white dudes on the board of directors and that's it? right? So we're starting to get more information. ESG isn't prescriptive. It doesn't say this is good, this is bad. But what it does is it starts to get this we call it extra financial information. So we're getting information above and beyond the financials to help us make smarter decisions. Divestment is when we're saying not one penny to certain sectors. So if you're telling me, Tim, not one penny to fossil fuels, or not one penny to military companies or to for-profit prisons, that's what's called divestment. Doesn't matter what their ESG score is. Doesn't matter if they're, they've got diversity and they've got good environmental performance. You're saying no, not one penny. And then the last approach is shareholder engagement, which is that as shareholders, we have a vote, we have a say in how the company gets run. And they have these annual general meetings, these AGMs. And sometimes we can put votes to the management. And this is about, well, how are my shares getting voted? Right? So these are all three sort of doing less evil approaches that have very, very minimal impact on financial returns. Right? Susan, okay. Susan asked, if you give your advisor directions to do ESG, what dangers are there in that phrase? I understand ESG can still include fossil fuel companies, for example, though they actively exclude tobacco companies. So no, ESG and divestment are two separate tactics, Susan. They've been conflated. This is the part of the thing that drives me nuts. I'll just, give people sort of a brief history in that, when I started doing this work back in sort of 2008, I graduated from my master's program where I looked at these issues and started doing this. And from 2008 to 2018, for that decade, nobody knew what the hell I was talking about. I was teaching people this stuff for the first time. People were like, what? Huh? You can do this? Wow, I've never heard of this. Then, about 2018 or so, all of a sudden, it started getting kind of sexy and interesting. And there was kind of this surge. And the problem is that people really started conflating the language. So ESG, for a lot of people, is synonymous with sustainable investing. It ain't. ESG is one tactic, a very specific tactic. And to your point, fossil fuel companies can have good ESG scores. Military companies can have good ESG scores. Tobacco companies can have good ESG scores. So with ESG, we're including that criteria in the decision making. Hey, that's important. But absolutely, ESG often means if they're only doing ESG integration, is the language they use, integrating ESG data into their investment decision making, they can still own a lot of those seemingly evil companies. So if you're saying, I don't want fossil fuels, then what you're looking for is divestment. Now, we can do investment plus ESG, no problem, right? Shareholder engagement is, again, we end up with a lot of nasty companies in here. There's a big push to get Exxon, and there was a climate win where we did shareholder engagement to get Exxon to put these two board directors on. That was 4 years ago. Nothing's changed. Nothing's happened. I have my doubts about shareholder engagement. I'll be real. I don't think it's working very well for us. And again, we can do ESG and shareholder engagement, but we can't do divestment and shareholder engagement. It's one or the other. In the sense that if I'm saying no fossil fuel companies, that means I don't have a vote in how they're doing. Right? So again, these strategies, you can kind of do all three, is the hope. But especially on the divestment, if you do have ethical issues where you're saying not one penny into certain companies or sectors, it's going to be divestment. We can also call this exclusions because we're excluding those things. The technical term we use is that it's a negative screen. So we're screening out certain companies. Now, from there, we also have the doing more good. I don't want to focus just on the doing less evil. Again, this is the market rates of return. Here's how we earn the same returns. We can also do more good, but this is where the returns can vary a little bit. Thematic investing with the green stuff, it's a lot more volatile because it's less diversified. So especially something like renewable energy, which is kind of like a sexy green theme, right? Renewable energy will outperform some years, will underperform other years. Right, 2020 green energy popped. It did so well, but then 2021 to 2024, it did terribly. Under whole Biden term, renewable energy stocks did terribly, and then last year, renewable energy stocks went up by 40% or something. Under Trump, it's so weird. You can't predict this stuff, but know that it's more erratic, right? And then impact investing is the grassroots stuff, the crunchy granola, investing with co-ops and nonprofits, and really the impact first, where yes, we're earning a financial return, but we're still, that we really still are, first and foremost investing for impact. Snigda asks, what are your thoughts on green bonds? So I love green bonds. Green bonds are fantastic. I've done a whole episode. I interviewed, I think it was earlier this year, one of the top green bond managers in Canada. So I can dig up that YouTube episode if you want. But he's with his name is Simon Senecal, works for a company called Alpha Fix, and they manage some of the biggest green bond mandates in the country. And I love green bonds. I think they're phenomenal. To me, they're an interesting because, they are sort of this more thematic investing, but they operate very much as doing less evil, that the returns on green bonds have been almost identical to traditional bonds. So big fan of green bonds. I have lots more to say about it. Maybe in the Q&A, I can show you green bond fund that I love. But really, I want to go back to my analogy, which is baking and pie, okay? Because I want to be clear. So crust are the bonds, and yes, we can have an organic crust made of entirely green bonds, Nigna, if you really want to, right? But that, bonds are the crust of the pie. Stocks are the filling. So again, doing less evil, that really is the pie, okay? And you can just stick with that. Doing less evil, stocks and bonds, boom, we have our pie. We're good to go. That said, a lot of people want the green stuff. And so that's kind of like the whipped cream on top, or a little bit of ice cream on top of the pie. You don't have to do this, but a lot of people come to me because they want to go heavier. I want to be clear, the green stuff is in the pie, right? The pie is so diversified. It's going to have a little bit of green energy, a little bit of water, a little bit of clean tech in there already. But what we're saying is, no, we want more of that. So we're going to put the ice cream on top, but that shouldn't be all of your money into green stocks. I'll never forget one client who reached out and he was like, Tim, hydrogen is the future. I want to put my entire life savings into hydrogen stocks. This guy was like 70 years old, like in retirement. I was like, no. Like, to me, it's like, if you really believe in hydrogen, you can carve out a little slice of your portfolio for it. But really, it's about the pie. Green stuff is the ice cream on top. And then the cherry on top are the impact investments, the community bonds, right? The renewable energy co-ops that should really be a tiny slice of your overall money, especially if you're just getting started. We don't have to do that right away. You don't need the cherry on top. We can just do the traditional stuff. But as you get, my hope is that you're growing this garden and you get to this point where you have enough money, where you have more than enough money. If you're fortunate and you've been saving and investing well, you're at this point where you've got more than enough. That's where we can carve out a bigger part of your garden for permaculture. Right? But when we're just getting started and we're just like learning how to garden for the first time, you don't even need to do the impact investments. That said, I love them. And to me, they're the coolest part of this whole thing. So let's see how we go there. So really the questions I want you to ask, the questions I want you to think about, number one, what's inside my portfolio? Most people don't even know. Most people don't even know. And it's awkward because it's like a fund of funds. So when you ask what's inside my portfolio, they're like, oh, you own this fund and inside of it are other funds. And you have to say, okay, great. So what's inside of those funds? And they're like, a lot of things. And I don't even know the full list, right? So it can get sometimes a little bit dicey. I'm someone that can really dive deep into this, where this is my expertise. So I know how to sort of be Indiana Jones and, dive into things. Some funds are more transparent than others. Number two is, once you know what's inside your portfolio, then ask the question, does it align with my values? What are my deal breakers? What are the things that I care about? Do I care more about ESG integration or divestment, right? The doing less evil versus the doing more good, having some thoughts there. And then the last step, I really want to reinforce this, is what fees am I paying? Because again, so far we've been doing a lot of the heart-centered stuff. How do we align things with your values? But for me, wearing my financial planner hat, one of the biggest issues I see with people is that they own mutual funds. That most Canadian, I think 80% of Canadians own mutual funds. And mutual funds have really, really high fees. And especially the socially responsible or the ethical or the sustainable mutual funds, they gouge you and you pay even higher fees. Such that you lose a huge percent, like literally more than half of people's life savings will disappear in fees. It's wild. And so to me, it's like part of my mission is certainly the values alignment side, right? And so yes, I can help you align your investments with your values, and totally we want to do that. And while we're doing that, I also want to lower your fees. And I want you to keep more of that money that you're working and saving and investing, and have less of it go to the financial institutions. So this is a critical thing. I can do a little exercise if people want to understand fees and the impact of fees. Like I can show you a little bit of a comparison. I've had a number of clients, and this is where, again, I love credit unions, big fan of credit unions for checking and for savings. I don't love credit unions for investments because if you just walk into your credit union and say, I want to invest, they're going to sell you mutual funds that have very, very high fees. Often the default is this firm called NEI, Northwest Ethical Investments. It used to be known as ethical funds. I don't know if there's anyone who owns ethical funds, mutual funds in the chat. Please let me know. But I've talked to like 3 people in the last week who each, through their credit union were sold these ethical funds. And that number one is, really it didn't align with their values. There was ExxonMobil was in their like ethical fund. Like it did not line up with their values. And then from there, really it does come down to the fees that they're paying, that they're getting completely gouged when it comes to those mutual fund fees. So there are better options. There are things called pooled funds where you pool your money together and that lowers fees. There are things called exchange traded funds where if you're willing to learn a little bit more and do it yourself, they have literally 90% lower fees than mutual funds. So I do, as much as I want you to align it with your values, I also want you to keep money in your pocket, which is, how I kind of do the 2 things of, this is good for the planet, but it's also good for your pocketbook, is by understanding not only what's inside your portfolio, does it align with my values, but also what fees am I paying? I do see a couple questions here from P. Janet Skinner. I'm an old crone, so no risks allowed. Crust only. Only crust. No pie filling whatsoever. Just transferred last bank investments to credit union as if they had green and ethical investing and was told that pretty much all of their investing is in this category. Is that true about credit unions? So this is again where it depends that yes, most of it will fall under this sort of ethical investing, but there's a big spectrum here. And so not only am I worried about what's actually inside and does it align with your values, P. Janet Skinner, but I'm also worried about the fees. So it might be worth having a little chat with me if you want to dive a little bit deeper. T. Derek Cook asks, what is the impact of going green on investments versus other options? Example, EVs. So if you covered this already but could not join earlier. So, are you asking about versus buying an EV? I think that's kind of what you're asking. So there was the slide about your deposits, and so the impact of your deposits we know is pretty high. Switching to an electric vehicle, it's going to depend how much you drive, but this is like 8K from a climate intensive to climate responsible. So my guess is this is 1.5. This is a little more than 2. So let's say you need about, let's call it 20K. That if you switch 20K from a bank to a credit union, that's about the same as switching to an electric vehicle. Now that's deposits. When it comes to investments, that's going to be a little bit trickier to assess the specific example of that. And then Vic asks, where do monoline lenders fall in ethical, sustainable investing compared to credit unions and banks for mortgages? So, okay, Vic, important to understand, debt is a very different thing. I don't care where you get your debt from. Get your debt from the person that'll give you the lowest interest rate, because there's no multiple effect. There's no multiplier effect when it comes to debt. That if you're borrowing money, really all they're doing is it's who you're paying the interest to. So sure, I would rather you pay the interest to a credit union rather than to a bank, but it's not going to have as much of an impact on climate or on investing, whether this is like your credit card, whether it's your mortgage, whether it's a line of credit. I want you to get like the best deal. This is where I do sort of wear my financial planner hat first and foremost. I want you to pay the lowest interest rate and get the best terms for your debt. And then only if all things are equal, that's when, I would obviously prefer for you to go to the credit union. Yeah, 440K of interest per mortgage term paid to the lender. Yeah, exactly. And so obviously if it's going to be 40K, I'd rather you give that to a credit union than a bank. But, if it's going to be 45K to a credit union versus 40K to a bank, meh. And again, to your point, I think the monoline lenders, I assume you're talking about sort of independent mortgage brokers, and there are a lot of independent places. Again, I'd feel better about that than a bank. But not as good as a credit union. But again, I want you to go to the place where you get the best terms on your debt I want you to wear that financial planner hat. And then only if the terms are the same, that's when we can do the more ethical option. But to me, it's like really, it's about where does your interest go? It's kind of like it's more of a purchase decision than it is an investment decision when it comes to your savings and your investments. These things are multipliers, right? Whereas when it comes to your debt, that does tend to be more of like, you're more of like a customer. So the last step is, obviously if you've heard what I've said here and you're like, Tim, holy crap, I want to do something about this. I want to make the switch, then, this is where I can absolutely help. I have different service offerings that I do for people who are just getting started or want to like learn more. Then I invite you to join my classroom. Here, I'll just bring it up here. GI Classroom. So this is sort of your starting point for sustainable investors. I'll throw it in the chat. This is like the cheapest option. It's $10 a month or $100 a year to join my classroom. This is where I have my mini courses. This is where I do monthly AMAs, Ask Me Anything. So I actually do it twice a month now. So I just did one at lunchtime today. And basically people get access to me. So they learn how to build a sustainable portfolio, and they can basically ask me any question they want. And again, the classroom is more aligned with DIY coaching, more for people who do want to learn how to do it themselves. Do it yourself investing. I know it sounds scary. It's really not. It's not rocket science. It's very simple and straightforward. But, people do need to learn a little bit. And then, people do, potentially need some help growing their garden. And so this is where you can hire me by the hour, and that you hire me by the hour and I will help you figure it out. That said, over the years, for the longest time, this was really my business model, was focused on DIY investors. But over the last, 10, 20 years, I've realized a lot of people don't want to learn to do this themselves. They're just like, Tim, please, no, I don't. Can I just pay someone to manage I want to hire a full-time gardener to just look after my garden for me. And especially if you are at the later stages of life, that DIY investing is really easy when you're getting started and when you're in the accumulation phase. So when every month you're investing a little bit more, a little bit more, a little bit more. DIY does get a lot more complicated once you're in the decumulation phase, which is, once you're in retirement and living off of your garden. It gets a little bit more complex. So that's why I do have full service partners, that for people who do want, I'd still say chat with me. I'll get a feel for, who you are and where you're at and what you're looking for, and then can put you in touch with a full service advisor. These are still going to be way cheaper than mutual funds, but they do often have sort of a minimum investment of about 100K. So if you've got less than 100K, the classroom and the DIY, like, you're probably better off there. And once you're more than 100K, that's where I can really introduce you to some full service partners. A good example is a firm called Genus, Genus. I can just show them, quickly, Genus, here they are. And here's the link if anyone wants to learn a little bit more. Oh, where did that chat go? Let me go back here. Hold on. Chat. There it is. But that with Genus, they've been doing this for a very long time. They manage money for the David Suzuki Foundation, Greenpeace Canada. They're a B Corp. So they're what are called pooled funds. So you're basically pooling your money with David Suzuki Foundation. My colleague Daryl, he is there. He's lovely. He's fantastic. So this is sort of the link if you do want to chat with him. He's an example of one of my full service partners, where, I consider them sort of one of the most sustainable asset managers in Canada. And so, really with the full service, what we're doing is, having the expert financial advice. You're not doing it yourself. You're hiring someone to do it. Really can, maximize your impact and minimize your stress is really the big point of doing a full service, that you're just essentially hiring someone to do it yourself. And so again, that'll still be way cheaper than mutual funds. But it's, basically you still get that full service advice. So that's how I help people switch. Happy to explain more about those different paths if people want, or to really go down any kind of rabbit hole that people want to go down with me. But really, the final thoughts I've got is that the status quo is very carbon intensive. That if you just, have your bank account with a bank that, your parents opened up for you when you were a kid and you just never bothered to switch. If you just went with the default investment option, you walked in the bank and said, hey, I need to invest. And they're like, great, here's a mutual fund for your RSP, right? Those things are very, very carbon intensive. So we do need to be a little bit deliberate, a little bit intentional about it. But it's not rocket science. That switching is very simple. It's very straightforward. I've helped, I think, over 20,000 people now figure out how to do this. It's not that hard. It really isn't. And there aren't major trade-offs. That usually by switching to a credit union, I usually lower people's monthly fees, right? Usually by looking at the sustainable option, I'm lowering people's management fees on their investments. So in fact, there's often a financial benefit to switching by shopping around a little bit. And that, the best time to plant a tree was 30 years ago. The second best time to plant a tree is today. I can't tell you how many folks, come to me. They're like, Tim, I heard you speak, 5 years ago, and I've been meaning to do this. I've wanted to, but I've just never gotten around to it. And I'm here to say, just like, please, pretty please, do it now. Do it now. Like, second best time to plant a tree is today. Let's do this today. That would be really great. If you want more information, my website is goodinvesting.com. So this is my website. You can go to the classroom. I've got a bunch of free tools. If people do want to look at the list of impact investments, that can kind of be a fun thing to do. And then if you do want a free consultation, if you want to chat with me, I would love to sit down and chat about you and your specific situation and help you figure out what path is best for you. So you can just click this request a free consultation button, and I'd love to hear from you. Okay, great. So that's it for the presentation side. I do have, so a couple questions here. Lisa, I see yours, but there's this question about green bonds. So let me just find the green bond one. Good investing green bonds. Here it is. So this is the episode that I did where I interviewed Simon Senecal, probably the smartest person that I know when it comes to green bonds. So that is the link for this episode. And just if you've got a question about greens bonds, I would love to do that. If you're curious about kind of where it fits into so I do have my free tools and I have my lists of all these funds. Now I focus on DIY investors. So I love these things called ETFs. And I do have a list of bond ETFs in here. And there are a few of them that are green. So this is like a North American Green Bond Index ETF. The one that I really love, the one that Simon Senecal helps advise, is this National Bank one, the NBI Sustainable Canadian Bond ETF, NSCB. So this to me is just a really, really cool green bond fund. Again, this is more for DIY investors, but if you're with a firm like Janus, like they, I think also use Simon's firm. So they've got like a green bond fund. So there are other ways that you can do it, but this is an ETF, exchange traded fund. It's got almost $3 billion in assets. And that it's managed by Alpha Fix, which is Simon's firm. Like I said, in my mind, they're one of the top firms. So really, really cool. I can go deeper dive if you want, but this is returned almost the same as a traditional bond fund. It is more expensive. MER is code word for management expense ratio, which is code word for annual fee. And so this is a little bit expensive, but despite the higher fees, it has done just as well as a traditional bond ETF, which I love. Andrea, great info. I love the classroom option. Thank you. It's been hard for me. The big thing with my business is that I'm not cheap. My one-on-one coaching, I'm like $1,000 an hour, and I feel terrible that not everyone can afford $1,000 an hour. And so I still because I want to be able to help as many people as I can. And so I really designed the classroom for people who couldn't afford $1,000 an hour, who just need a little bit of help, especially if you're getting started or you just want to learn more. This is really my cheap, accessible option. I do charge, it's like $10 a month or $100 a year, but really that's just as a little bit of a barrier because I want people to be serious getting in there. That was sort of the lowest I could go. Because I do want to make it accessible. Okay, Lisa asks, I'll stop sharing my screen for a moment. Where did that go? Hold on. Lisa asks, do you have advice or suggestions for those of us for some funds looking to invest before the RSP deadline? I don't feel I can be as strategic or big picture as I'd like to with the short turnaround. Oh, no. Okay, so don't stress about the RSP deadline. The RSP deadline is one of the biggest, I don't know what to call it. It's not a scam, but it's just like a nothing burger the fact is that, if you're really pressed for time for the RSP deadline, just put money into whatever RSP you currently have, knowing that if you want to take the time to shop around and to figure out this stuff, then, let's take the time to shop around and figure out this stuff. And we can always just move it later. So don't feel like you have to have everything figured out before March 3rd. Okay. What you can always do is simply put cash inside of your RSP and not necessarily invest it. We can figure out what to invest it in later, because that's the deadline, is it's for your contribution, not for the investment. Right. So you can always just put cash in and do that. But Lisa, this is going to be a bigger question, because I don't want you to have like different pies for different things. It's not like, ooh, here's one thing that's for your RSP. No, no, no. When we talk about baking a pie, we want to consider all of your accounts, right? We want to consider the investments kind of across the board. So it is a slightly bigger conversation. So my suggestion to you would be to just, wherever your RSP is now, feel free to make your contribution now or before the deadline. And then let's have a conversation, or, join my classroom and start learning about it. And then knowing that you can always sort of make the switch at any point without the stress or the fear of that deadline. I don't want you, these are big decisions. I don't want you to make it sort of under duress. That said, if you do want to chat sooner rather than later, hit that request a free consultation button on my website. We can absolutely sneak you in sooner rather than later. My dog is here behind me. She's wearing a cone because she's got a bad nail, but if you see a little tail pop up, that's what's going on there. Awesome. That's a relief. Thanks. Fantastic. Have been eyeing the consult and our classroom for a while. Lisa, fantastic. Consider this your impetus. All I'll say is that it kind of depends where you're at. If you're just starting the journey, do the classroom. If you've already got investments and you're looking to make a bigger switch, or it's a bigger thing, then, that's where I would say, sign up for the free consult and I can help point you in the right direction. How'd I do, Susan?
I think fabulous, really. And I really want to thank you so much, and thank you for your contribution to us, to CNL, and thanks for launching this whole thing, Tim. It's just
It's my
tremendous.
pleasure. I'd
And
love to talk about impact investments if people want to stick around for 5 more minutes. I recognize we're at the
okay,
hour.
but what I'm going to do here is, just in the chat, I'm going to ask people if they could comment on this, on, I don't mean Tim necessarily, but just the whole thing, and just send us an email at hello at Climate Network Lanark, and I hope I'm going to spell this properly, .ca, and just tell us what you think about our speaker series and this first one. So thank you. And so fire away, Tim. Give us
Okay, great.
another few minutes, though, please.
I'll just do 5 minutes. And again, if people have questions, I'm not going anywhere. So, happy. Thank you so much for joining me. If you have to hop off, completely understand. But let me just give you a quick little overview of my research on impact investments, because there are some really cool options close to you. Okay, so again, these are impact investments, are things that are really direct investments in nonprofits, co-ops, things like that. Go Parity is a really cool platform for a crowd lending. So if you want to lend money to small businesses, they've done some really, really cool things. I'll show you some of their funded projects. So Mi'kmaq Cultural Foundation in Newfoundland. The Green Mustache is a locally sourced cafe in Whistler. Took Tree Green Homes in Baysville, Ontario, raised $37K. So some really, really cool projects here that I absolutely love. Sober Island Oysters. This is a family run oyster farm in Nova Scotia. So, small amounts. But you can see sort of the terms here. Really, really cool. What's great about them is that the minimum investment is like $10 or $20, and I actually have a $50 voucher that if you use this link from my website, that you'll get a $50 voucher. And so it'll just make your initial investment go a little bit further. Otherwise, I wanted to highlight two. One is OREC, Ottawa Renewable Energy Cooperative. Super, super cool organization. So this is a nonprofit cooperative, and they're not just their projects aren't just in Ottawa. They do have sites sort of Alfred, Ontario, Hawkesbury, Ontario, Gloucester, Dunrobin, Nepean, Gloucester, like they're all over the place, Gravenhurst, right? So you might find something, sort of near where you're at, but they own some amazing. Yeah, Pam is saying OREC is awesome. Been a member and investor since 2014. Woo, Pam, this is awesome. So I love them. They offer what are called preference shares. So $500 a share. Expect to hold them for 10 years. This is one of the big drawbacks is that there isn't a lot of liquidity, and they're targeting a 4% annual dividend. It's a dividend because these are shares. And then the other example I have for you is Ottawa Community Land Trust. Ottawa Community Land Trust, super cool organization. So this is all about affordable housing, which, oh my goodness, so needed. So they've got these Housing Forever bonds. They've partnered with, so it's Centretown Citizens Ottawa Corporation with Ottawa Community Land Trust. And they've got these Housing Forever bonds, which are super, super cool. It looks like they're doing something. This is what, in like 5 days at the Lansdowne Winter Market. Amazing. Absolutely love them. If you want to support affordable housing in your community, it's $1,000 a bond. They go from 3 years up to 7 years. They have different series. The longer you're locked in, the higher interest it pays, from about 2.75 up to 3.5%. So, these are really super, super cool organizations that, I thought of. The last one I want to show you is Fair Finance Fund. This is a sustainable food bond. Fair Finance Fund is so cool. Basically, these are loans to local food and farm social enterprises here in Ontario. So to me, this is just, we absolutely need sustainable food. And so when I look at the loan client portfolio, there are all kinds of cool things. Classic Juice Company, Heritage Shorts Butchery, the Einkorn Shop by Food Haven, Angan, who I absolutely adore and love. They do really cool work. Aunt Sybil's Caribbean Flavors, Grey Wolf Gardens, Sundance Harvest. Like, there are just so many organizations here across Ontario building sustainable food. To me, it's just like, this is just such a cool grouping of amazing organizations. When it comes to Fair Finance Fund, 5K minimum. So this is a little bit heftier. This is a heavy cherry on top of your pie. You are locked in for 5 years. You're earning 2%. So these aren't things that are going to make you rich, like these impact investments. You're not going to get rich doing these things. That's not the intention here. The intention is to be able to have that positive impact within your community, joining a renewable energy co-op, or helping to build affordable housing, or supporting sustainable food ecosystem. You can see why I love these things so much. Again, I don't want you to put all of your money into these impact investments, right? It really is just the cherry on top of the pie. But especially if you are, you're in a privileged position where you've got more than enough, right? Then good job, congratulations, high five, but that does mean that we can carve out a larger percentage of your portfolio for these options. So I'll throw that link in the chat. Yeah, I'm happy to provide if you want the exact slides, no problem. I think the whole video is available. And,
Yes.
all my stuff, it's reallygoodinvesting.com, my free tools. That's where I've got sort of all my lists and model portfolios, and that green transition scoreboard research, Susan, we talked about at the start, showing $20 trillion in green money flowing into green sectors. So yeah, just wanted to kind of share that little tidbit, just because I think that it is the piece, for folks that have carved out part of their portfolio for these things. I know absolutely feel great about it. And I think that there's always this big issue around greenwashing. And so, to me, it's, yes, doing less evil. Okay. We're still participating in capitalism and doing that. And so for folks who really want to have sort of the highest standard of sustainable portfolio, don't put all of your money, but carve out part of it for these impact investments. Kind of lets us sort of plug our nose with the rest of our money, knowing it might not be perfect. And then, but we can carve out part of it for these really, really cool, impactful investments.
Fabulous.
Sweet.
Thank you, Tim. And just everybody, keep your eyes open. We are certainly hoping to do a session with Oric about a project here.
Love it.
That's our dream. So,
Love it.
yeah.
And I did a YouTube with them a little while ago. I interviewed Carter Sheik. He's a board member there. So by all means, keep an eye out. And if you want to learn more, but I would say absolutely like get them in. They're such an incredible organization.
Dynamite. Thank you, Tim. And
Such a pleasure. Thank you so much for having
yes,
me.
we've
Bye,
learned an
everyone.
awful lot. Yes, and people can go on to our website and see the recording a little later. We'll have it posted. Okay, thank you.
Have a great day.